So I'm pretty much coming in gonna be explaining this harmonic pattern setup that I took today. This is a 4-hour Gartley, and I'm gonna pretty much start from the top. So I'm gonna start from the 4-hour time frame. Identifying our 3 stages. First is our identification stage, our X to A being our first impulse, our B to C being our second impulse, followed by the last leg back down, completing at our harmonic level. The Gartley completes at the 786. So I was looking at price to complete around 1.88. And all I need for me is the counter closure. For me, people have different confirmations. Even Scott, I believe, has a different confirmation. But for me, I just wait for a counter to close. And if a wick, if price actually goes down into the harmonic target area and then rejects back out and closes as a wick, I count that as not an activated pattern, but a activating pattern. Specifically activating, meaning it could specifically go straight to target one. So we'll just keep going. I like to enter on 1 and 2 time frames lower than I identify my harmonic pattern. So we have identified our X to A to B to C to D. We have said it completed around 886 and it closed with this candle here. But now I'm going to go to the lower time frame. Specifically, I'm going to go to the hourly and I'm going to bring on our indicators. Now, I'm actually even going to go to 2 time frames down. I'm going to go to the 15-minute. And I want to mark the candle that closed. Let's zoom in here. I want to show the emphasis on this candle right here that is closing beneath our 786 fib level. Now there's things over here, so you may not be able to really see it, but by that closing candle, I draw this yellow zone box, and that yellow zone represents our terminal. Our terminal is the candle that once again closed in our activating range, and this, for me, I use as my PRZ. Now, if you study Scott, you may be able to see his different PRZs, but I'm just going to use this as our terminal for right now. For me, once I have identified my pattern and I'm on the lower time frame, I just need price to cross the EMA twice. This is the first cross, and then actually did it 2, 3, 4 more times. But what really is happening here is we have, where's my arrow here? We have our bullish impulse up, right? Well, after we have our bullish impulse, it tested the terminal bar, literally just consolidated here until it decided to finally sweep the low. After it swept the low, then the trend actually continued. So me, I actually had my trade here set up, entered here. I had this right here, and I played this. I actually hit that target, and I took a little bit of profit, but I saw how it closed. Remember, we're just on a lower time frame right now. This is on the 15-minute. But I have to pay attention that the pattern actually completed on the 4-hour. So in actual time, when the pattern completed like this, I believe. Yeah, when it did this and it was closed like this, I was like, oh, nah, this ain't it. That can't be, because this is, yeah, I remember looking at this exactly like this. I was like, this is not a strong enough bottom to hold. You know what I'm saying? These candles right here are giving you signs for what's to come, but I believe price is going to come back down. So ultimately, that is what price ended up doing. And when we were right here, I let some trades break me out at break even, and then I let some trades run because I wanted to trust my analysis, and it came and stopped me out. Now this is where I actually went to sleep. I said, bump this, I ain't paying attention. I'll try it again doing New York. What actually happened in between right when I got off the chart. So it always happens. Price did this maneuver right here, giving me our next and last confirmation back up. And just taking back off. Now, what's interesting is well, I forgot to say. I forgot to say something. So this right here is where I went to sleep, and Price did this, and it's New York, and I'm like, oh man. but I forgot I had some buy limits set beneath these lows. If you see, these are just equal lows right here. Probably some money that the banks just have chilling. Everybody got their stop losses. Everybody is in the buy. If it looks too good and it literally looks like everybody's buying, oh yeah, it's coming back. So what I did here after that is I like to buy the fear, sell the greed. How do you buy the fear? First, you have to identify the fear. So me, I'm gonna take the low to the high, and I'm gonna use the wick in this case to this wick. Put on my reverse fib, and let's make that thing blue. Let's just do a different color because we got a lot on the screen. So for me, buying the fear represents the -13 to 272 region. That is where I'm really trying to buy the fear. So I had buy limits specifically right at the 113 and the 886, the sub Gartley level, because the Gartley likes to, it's like the shark. If you know about harmonic patterns, the shark and the Gartley like to give two reactions, a smaller reaction before the real reaction. So I know that that was a possibility that was going to happen. I was also doing some other things, so I was away from the charts. But it came down and wicked beautifully, closed down here on the 15-minute, rejecting in 2 to 3 candles on the hourly, and I believe on the 4-hour it didn't even close. Immediately just turned back around. This is our confirmation candle off the terminal bar. Remember, this is a 4-hour confirmed pattern. So we were just watching for the reaction this whole time. We were just watching for the reaction to 1.88600. We can see this is our last candle, followed by that green arrow. That green arrow was also our last time the price crossed over the 50 EMA. 50 EMA bring our halfway point, our indecisive point, our indecision point. We're really going to be determining to get into the market. What we're trying to do is we're trying to take it from the bottom up for our first reaction up to our first target point. Our first target point is a 382 fib. And how we got the 382 fib, we measured our C point down to the D, the completion of the move. The whole completion move measured up into 30% first target, 50% second target. And yeah, so that's the entry part. Now, once again, you have 3 stages of the harmonic pattern. You have the identification, the X, A, B, C, D. Okay, cool. You got the execution. All right, you're waiting for price to give you confirmations to get into the trade. Okay, boom. We have now executed ourselves into the trade. And now the third thing is the management. Now, the management, in my opinion, is the most crucial part, because how can you get all the pips if you don't catch the pips? For instance, me and you can take the same exact trade by copying a signal, but if you don't know how to manage the trade, and you, for instance, get out right here, when you see the market pulling back, you like, oh snap, saying, I don't know about this. It may look a little wonky. You know what I'm saying? I'm just gonna take my profit. Hit the first target, it's good. I'm good. But little did you know, price was just gonna continue all the way up and hit target 3. See, this was me. And I had good trade management. Means I was good. I was good. And I wasn't even on the chart. I literally came back to the charts and I just woke up. Not woke up, but I came back to literally $1,000 in profit. I said, good money. Took it. Now, if I was actively on the charts, I was actively in the setup, actively watching, I can see that it's heavily, heavily trending healthy. And what I mean by that, even when you have, so you have impulses, you have contractions and expansions, living flow, and in those contractions and expansions, we have you know what I'm saying, we got our high points, and then we have our low points. In those high and low points with those contractions and expansions, there's going to be a time where the market likes to do, for lack of better words, let's say a breather. And when it does that breather, that's going to be an opportunity for us to get into the market. And for visual purposes, what I'm doing right now is I'm using the 50 EMA to kind of give everybody the same page on where we're trying to get into the market. And this is how we kind of took this setup right here, like that. So that's kind of just like a quick example. Um, that was just a quick example of the flow and wave, right? And what I mean by the flow and wave, if this is the point in time where we enter the market right here, and I'm gonna put some emphasis on this fill, and let's make this a little bit brighter. So pretty much every time price comes back down here, if it does not close beneath this green bar, meaning areas like here, when it literally came all the way back, if it does not close below, that's a breathing time for us, either double up, meaning you can enter into the market, or just continue to hold. So it gave two little breathers that were close. This one wasn't as close as the first one. The first one actually came below, but it rejected below. This one just came pretty close and then gulfed out, went straight into target two, heavily, came back, breathing again into the zone. But the breathing held. There was a nice strong. The trend was accepting the expansion. Okay, expanding again, hitting target three, and here we are. You know what I'm saying? Trending heavily up to target three. Nice full expansion. So me, I'm no longer into the market, but I'm fully watching how this is just exploding and imploding. And this is how you can use, for instance, a 4-hour harmonic pattern that didn't really give you the strongest and best identification from the 4-hour price action standpoint, but on a lower 15-minute harmonic standpoint, all I had was just buy limits, just limit orders set around here. Literally. That's it. It's the visual perspective. And then I had some down here as well. So it's good to know where to bounce back and how you get in the opportunity, etc., etc. So pretty good video, pretty good analysis. 40-hour GBP AUD, 4-hour Gartley. Yeah. Appreciate you. Love and peace.